Hello and welcome to this week's edition of Invest Africa. I'm Alicia Seckham. Well, while Africa is hailed as the world's new investment frontier and the continent has shown sterling economic performance, Africa's agricultural sector lacks luster. Unless Africa gets to grip with its Achilles heel and rises to the challenge, the breakthrough anticipated by investors and governments may not come to fruition.
Between 2010 and 2025, 16 of the top 20 fastest growing cities in the world will be in Africa, and the population of 5 of the fastest growing cities will double, coupled with a tripling of the middle class and productivity that is predicted to grow by 3% annually. These statistics paint a promising story. However, the food-related statistics tell a mixed story. African women grow 80 to 90% of the food in sub-Saharan Africa, but own less than 2% of all land. 3.5 million more tractors are needed to put Africa on par with other regions, and 79% of Africa's arable land remains uncultivated. This according to the Ibrahim Foundation study conducted in November last year. Food production has not kept up to the explosion of Africa's population, and as a result, the value of annual food imports is expected to rise to a costly $11 billion by 2020. However, in 2003, African heads of state and their governments showed an appetite for serious investment in agriculture. They agreed to the signing of the Maputo Declaration on Agriculture and Food Security, meaning that countries have committed to increasing their agricultural budget to at least 10% of their national budget within 5 years. Since the signing of the declaration, there has been a notable shift in a handful of African countries. Countries such as Rwanda, Malawi, Mali and Kenya have all secured agriculture investments way beyond the targeted 10%. Because of these new capital injections, modern agriculture equipment has been imported and farmers have been offered incentives to increase productivity.
Well, joining me in studio now to take a closer look at the agricultural investment opportunity space and challenges in Africa is Anthony Delport. He's South Africa country head at Syngenta, Hans Balyamujura, who's general manager, agri-business frontline and Africa at ABSA, and John Purchase, CEO of AgBiz. They all join us in studio, while joining us from our bureau in Nairobi is Hugh Scott, director at the Africa Enterprise Challenge Fund. Welcome, gentlemen, and let's get straight into conversation here. I mean, John, I just came through a study this morning that reflected wheat production in sub-Saharan Africa is at only 10 to 25% of its potential. That potential sitting with a net return possibility of $200 per hectare. I mean, why is it such a challenge, broadly speaking, developing the agri space on the continent?
Yeah, there are a couple of reasons. I think the primary reason is around policy issues that we still find, and forms of government that we still find problems in Africa. There is development in some countries granted, and the insert also showed that the investment in agriculture from certain governments is improving, but it's certainly not at the level that it should be. So there are a couple of factors that we have to look at. Infrastructure is obviously another major issue, which makes the cost of doing business very expensive. So we've got to be competitive, and we've got to create policies that make us competitive in the global market. We're in a global food jungle, and we've got to compete in that jungle, and we've got to change our thinking about competitive agriculture.
Let's perhaps, Anthony, focus on the regulatory environment that investors have to operate in within the agri space. I mean, commentary has been that Africa's business environment is improving, that governance on the continent is getting better. I mean, from your experience in the agricultural space, is it getting easier to do business within this sector of the African economy?
I think it's a very relevant question, Alicia. We can see in the last couple of years and months a strong political will to put policy in place to enable this agricultural growth we currently are all aware of. It is actually very important that there should be a very strong and robust regulatory framework in place in order to stimulate this potential growth in Africa. But definitely, yes, governments, and a good example is probably what we see in Tanzania. in terms of government's involvement in making this happen.
Yeah, it's risky business though by nature, and that's where a player like Syngenta and its role in developing this space actually stands out. So take us through, as a mechanism, what we're looking at from Syngenta's side, looking to alleviate some of the challenges and the risks that are inherent to business operating here.
Sure. In terms of the risk, there are obviously political risks and in some cases instability, but that's something you encounter wherever we operate as Syngenta. So it's something that we wouldn't have even considered in terms of making this investment to this size of $500 million if we haven't considered all the factors. So we believe, and we're very confident, that we can be successful in managing these risks if we align the right partners and making sure we involve governments at all levels in order to enable their function in terms of alleviating some of these pressures and be part of this growth initiative in Africa.
Hence, not so long ago, we had a drive by the former Soviet Republic of Georgia, luring farmers its way to rebuild the sector on that end. And we had quite a few South African farmers being enticed, and lack of government support in South Africa in particular was cited as one of the major reasons for their exit. Are we seeing enough stride from a government's perspective in terms of helping and sustaining this industry moving forward from a financier's perspective?
Well, I think from anyone's perspective, would want to see a lot more government involvement or support from a policy perspective. And you would also say that I think it's one of looking at ensuring that the policy environment makes it competitive enough for the farmers remain engaged in commercial production or commercial agriculture. I think the challenges faced by South Africa are a bit also unique compared to the rest of Africa. In that one, South Africa has got to handle or address land reform and complete that. And while you might see that some commercial farmers were attracted out of South Africa, you would actually say, I wouldn't say that they are leaving South Africa. Some are divesting in terms of diversifying their risks to ensure that they're exposed to other risks, not only South African risks, and knowing that they cannot expand as they would want to expand in South Africa. But it's also, the expansion is mainly driven by the cost of production. And the only way you can drop your costs is really to manage your fixed costs. And that's why you find farmers expanding. And it's one of the challenges that you face within Africa, in that while you have the majority of farmers being small-scale farmers, they face exactly the same type of costs. And that is one of the big challenges on making agriculture profitable. How do you make it profitable, bearing in mind that you have the majority of your farmers are small-scale farmers? We'll
be touching on infrastructural capacity and technology, in aiding that part. Before we do, though, let's take it to Nairobi, where Hugh joins us. Hugh, how do you rate the willingness of government out there to work with investors to develop the sector of the economy? And perhaps an indicator of that would be the regulatory environment from your experience over in Kenya.
Agriculture is very much at the top of the priority list for many African countries. We at the Africa Enterprise Challenge Fund, which is it's about a $200 million fund that invests in agribusiness in over 20 countries in Africa at the moment. We recognize in many of the countries in which we work in that the regulatory environment for agriculture is improving. But one of the key issues behind that is it's not really what the facts of the matter are, it's what the perceptions the private sector has. And still Africa has much to do to change the attitude that people have about Africa. Actually, it's a much better place to do business in than most people believe. But actually, fortunately, investors act on perception rather than fact. So there's a lot of work to be done. But the real issue, I believe, is basically about making agricultural markets work. And I think we would all agree that that's a combination of the legal and regulatory environment being positive, the necessary infrastructure, the necessary financing mechanisms in place. It's not just one element that's going to make the difference. It's about getting that package of activities and support mechanisms in place that can make those agricultural markets work a lot better.
So let's drill down into some of those support factors for this industry. Hence, you need access to capital, as Hugh highlighted. You need financing mechanisms as well. How easy is it to secure financing for agricultural projects on the continent? Because from the research I've been doing, one gets a sense that the financial sector in Africa still operates on quite a conservative basis.
Yes, you'd say, and like he was touched on, it's a number of aspects. The environment in which you operate has a contribution. Because the key issue is going to be what kind of policy or markets do we have? What's the access to the market like? And therefore, do we have certainty in terms of getting the produce to the market? And once we get into the market, do we have a strong and efficient demand to ensure that it gives us a value? Because it's the maintenance of value that helps you service any debt that you may be having. So you find that our main challenge is that you would have policies at times that do not necessarily talk to the produce, meaning that you probably have produce, but you're in an environment where your market price is actually falling. And therefore, with prices falling, you're unable to service the debt. But it's a combination of everything, is that you cannot look at only increasing production while not necessarily looking at what the demand looks like and what kind of market you're in. Because at the end of the day, it's the value that we have of the produce that is going to help us service the loans, if we are talking of loans, or even drive the growth and development. But in arriving at that, we've got to ensure that we actually build and grow our consumption. You'd argue that the African continent currently, taking South Africa out, our consumption is still very low, and a lot of it based on the consumption of primary produce with limited agro-processing. The moment you move in and you have agro-processing, it multiplies the size of the sector and ultimately increases your consumption, and therefore literally lifts the level, your minimum floor, in terms of valuation or the value of the produce that you have. And that makes it more attractive to get involved into agriculture. And that is sort of the bridge that we need to jump. It's more of looking back into Europe and say, we need to get into a phase of industrialization. I would argue we're not yet there from an agricultural perspective.
From that one bridge that you've got to jump over, what about a distinction needing to be made between financing of bigger projects and then debt financing for your smaller projects? To what extent is that a consideration?
Well, you would argue that it is a consideration, but ultimately to get agricultural development, we're going to have to look at a combination of both. We cannot say that we're only going to look at your big, large-scale investments. You need a combination of your large-scale investments together with your small-scale investments, because in some of the countries, you'll find that due to land tenure, land ownership is really small. So it's 1 acre, 2 acres, and you're not going to get massive sizes of 4,000, 5,000 hectares. Like that you can experience in some countries, for example, like Mozambique, you can get that in Tanzania. But if you pick a country like Uganda, you won't get access to such pieces of land. But you need to ensure that you're able to create an environment that is supportive to everyone involved within agriculture. Yeah. So it's one of trying to create a combination that is ideal for the selected country. And even if you look at it in terms of being the very small farmers, the 1 acre farmers, you need to build scale again to try and get them to take advantage of the benefits of economies of scale. That's linking them into some value chain.
Of course, we've had some out there saying that the situation or the context is improving because there's more specialized businesses that financiers can actually get their hands on, you know, and if you have got a company like Syngenta, for example, investing, as you said, over $500 million in Africa to open up the seed technology market on the one hand to farmers, to enable them to achieve greater crop yield, to help them, you know, achieve economies of scale as well. Surely that makes financing a little bit more tenable.
Definitely. Alicia. Our strategy is quite simple. It's about helping African farmers. It's about increasing sustainably their productivity by 50% to make them sustainable in terms of food production. And the way to do it is through our seed technology, our crop protection technology, as well as our seed care technology. And by doing that, we will then also transfer the knowledge and the expertise in terms of farming practices. And that makes it essential to make them sustainable, but also to make sure that they don't only provide for themselves, but we can turn Africa into a major food exporter.
Well, let's hit pause on the conversation for now. We're heading into a quick commercial break. More on Invest Africa when we get back. Stay tuned. Welcome back to Invest Africa. Well, Africa has been looking to increase trade rather than aid as a way to alleviate poverty. According to economists, say 2% increase in Africa's share of global trade could halve unemployment. And when it comes down to agricultural land, Africa has a significant global competitive advantage, a position that it needs to make use of.
Even though agribusiness is regarded as a risky endeavor, over the past few years, companies and foreign governments have been acquiring land in some of Africa's poorest countries.
Food security has moved up the international agenda, particularly with China, because with their population and their growth, they can't feed themselves. So they've got to be looking for other land. And so we're finding India showing interest, Brazil, Israel, who've got some amazing technology. And then from Europe as well. So there's a lot of interest, far more now than there's been in the last 12 years.
If the correct measures are put in place, foreign investment can help African countries create jobs, increase foreign earnings, and use more advanced technologies.
I'd rather go into partnership with the landowner, and we form a joint venture with them. However, there are many countries that don't share that view. China is one. India's also had cases where they bought up quite large pieces of land.
But there has been concerns raised that poor villagers will be forced off their land and agribusiness may marginalise family farming.
Then there are other cases where, for example, the local government have allocated land, but they haven't consulted the people. And the peasant folk sometimes don't like it. And that can present difficulties.
Farmers all over the continent are faced with challenges that have also impeded the growth of the agricultural sector. Casper Botha, a South African commercial farmer who has been in the farming business for over 2 decades, explains why the country's regulatory framework has made it difficult to stay competitive.
Having protection in our financial instruments and selling agricultural products in South Africa, because we get dumping from European American companies here that is being subsidized by their governments, and we are not have a level play field to those farmers.
The global demand for food and agricultural commodities creates a new opportunity for African farmers, and the need for public policies and infrastructure to support those agricultural sectors is evident now more than ever. Tumisho Mahanyele, Johannesburg.
Let's get straight back into conversation now. And John, we were talking about finding funders, financiers of projects. What about the need to find relevant partners? We had this, highlighted in the insert there, especially for foreign entities going into a country. Is it a trend that you see developing, or is there more of an aversion?
No, there's certainly a trend of foreign countries investing into Africa. We are concerned about some of those models that they are investing in, as was alluded to. We believe from South Africa, where we represent a number of agribusinesses investing into Africa, that you must have a responsible protocol that you invest according to. In other words, also involving the local population. Try and bring the smallholders into the commercial value chains, etc. Some of those models are just to produce for themselves. They bring the labourers, they bring everything, they bring the technology, and they just export.
So we need to see more beneficiation happening.
We need to see involvement of the local communities. We need to see beneficiation in those areas. Otherwise, it's just the raw commodity that's exported, and I don't think that adds any value to Africa whatsoever. Mm-hmm. So we are, and we know that FAO and OECD are working on an investment protocol for Africa. In terms of land, etc. And I think it's critical that governments adopt such a framework or a protocol, investment protocol for foreign direct investment, in which there's what we call responsible principles applied. Yeah. I think the banking sector, and Hans can help me here, but they have the Equator Principles, according to which is also a responsible investment protocol.
Mm-hmm. We'll be getting to that. Hugh, I just want to bring you into the conversation at this point. I mean, this entire scenario puts quite a focus on having the right skills base to start off with. I mean, the process of selecting who you actually partner with has got to be pretty rigorous. What kind of criteria do you look at when you're looking to make your investments out there?
Well, we're a very unusual fund. Whilst we actually get money from the development partners, from the British government, Dutch, Danish, Australians and others, to invest in innovative agribusiness deals across the continent. And obviously what those development partners want to see is an impact on large numbers of poor people living in rural areas of Africa. But they're also interested very much in sustainable development, and you can equate in this sense sustainable to profitable, because if these investments are not profitable, then the development impact won't be sustained. So I just wanted to go back a little bit to John's point that I mean, to me, it's not really about whether it's about commercial large farming or whether it's about smallholder farming. That most of the successful arrangements where these things work is actually a combination of the two. Without the technology being brought in by the commercial farm, about that center of excellence, then it's hard for smallholder farming to develop. And equally, if the larger commercial investments are not having some wider benefit on the community, and that is not just about doing corporate social responsibility, it's about actually affecting the incomes of the people there, providing jobs, providing increased incomes from the small farmers. And it's a question of getting that right, and that balance right, and also having the environment right, and also ensuring that the issues around land, which you've been talking about, are dealt with sensitively, are dealt with in relation to the law, and respecting not only the formal legal arrangements around land, but understanding there are informal rights on those lands too, and that the right deals have to be put together with the community and with the government.
Let's bring government into this equation of getting the right skills base in place. What role do you see government, Anthony, playing in this regard, especially where in most instances you have farmers not having enough information on new farming techniques like like what you're putting on the table?
In the case of Syngenta, if we talk about technology and education, and training, it goes hand in hand, and that's pretty important to make sure that we address both those things.
Is government doing enough?
In terms of government, I think the involvement of government at the fairly senior level needs to happen in order to show the benefit and show the advantage to governments in various African countries if they do participate in these activities. In our case, we're busy establishing an African training academy, which will do exactly what you're talking about, training farm managers right across the region in Africa. Some of the training will even take place in South Africa. So you need the cooperation of governments, the coordination of governments to make sure that we bring this technology, not only the technology, but also the know-how in terms of growing crops sustainably and profitably. And that would alleviate even poverty if we can achieve that.
So inroads being made into tackling that challenge. Let's put on the table now infrastructure constraints and the kind of challenge this puts on the table for business operations, and viability of a business from the businesses you've assessed.
Well, definitely that places a big challenge, and I think it calls for, well, if we talk of government, calls for the coordination of all investments taking place. A number of the African countries actually just currently really starting to exploit their mineral resources. But we have got to exploit those, set up mining operations, bearing in mind that at some point those mining operations will come to an end, but those communities are going to remain. So the question is, if you take an example of Mozambique. You have large mining operations in Tete, but you've got to set up the rail infrastructure in such a way it's going to support agriculture in end. Because the one advantage is that mining can afford to make investments into infrastructure.
That's exactly what I was going to ask you, because if you look at the investment models being used by miners operating, the private sector comes in, builds infrastructure around them to a large extent because they know that they need that to support their business. To what extent do we need to see agricultural players do a little bit of the same?
Now, this is where I actually call for a lot more government foresight in trying to see how that gets integrated into the agricultural operation. So that then your mining operation basically forms, should we say, the main line, and you have agriculture building your secondary or feeder lines into your main rail infrastructure, as an example. The other important element, of course, also is that the mines are building or increasing consumption of the local produce. So the question is, if you come and have a mine being set up, how are you linking it back into your smallholder producers so that they produce the food for the mines? So that you tend to have some other investment that happens within the local environment. The other point around government involvement is that, which would probably be a way of looking at it, is that a lot of governments, and I think Africa has done quite well in trying to improve revenue collection. That was always a problem, but most countries have sort of set up parastatals and collect revenue quite well. It would actually be the similar effort that has been set up in that structure that is required to manage or set up smallholders. Because the smallholders have got to be set up with a view of saying, how do you actually make them profitable? But they need extra support, and you cannot expect the smallholders to manage themselves. So it's what role can government play in collectively managing the smallholders to make them a profitable unit, knowing that on their own they're not going to be able to survive. And that's going to be the backbone of developing African agriculture.
John, it's certainly a long road ahead in terms of, jumping all these hurdles that that investors in the space have to. In the interim, government subsidies for developing this industry. I mean, we had Kenya subsidizing fertilizer, I remember, at a point to aid struggling farmers. The risk in that is that you create possibly a dependence on that, and it's a very fine balancing act that you've got to play there. So what's your view on that? Because it's good if it's responsibly managed to the end goal of those businesses becoming, at the end point, self-sufficient.
Yes, one has to take a global view on this, and the point was made too previously that we in a global environment. We do know that many countries, especially some of the first world countries, do still subsidize their agriculture. So it's tough to compete in that environment if you don't have some sort of protection or some sort of subsidies. Now, in South Africa, our subsidies are of the lowest in the world, and one should try and move to remove subsidies as much as possible. I don't think you can do it totally, and I don't think you can work without some form of tariff protection of industries to a certain degree. Where that balance is, I think, is very important. I don't think we always get that right. I am very wary of input subsidies because they tend to become political instruments, as happened in Malawi, and then to have an exit strategy for them is really difficult because you make people dependent on them. But certainly, I think smart support we should look at, perhaps not necessarily in the input side. I think governments are not investing enough in agriculture, are not investing enough in skills development, productivity increases, and I think that's where we can, the gains that we can make there can really benefit us tremendously.
Especially if you look at the potential. Gentlemen, we're going to have to leave it there. Thanks so much for having joined me at the desk today. Of course, Anthony Delport is South Africa country head at Syngenta. Hans Balyamajura is General Manager of Agribusiness Frontline and Africa over at ABSA. John Purchase, CEO of Agbiz. And then, of course, having joined us from our studios in Nairobi, Kenya, is Hugh Scott, Director at the Africa Enterprise Challenge Fund. And that's where we leave it for this edition of Invest Africa. We'll be back again, same time, same place next week. Until then, from me, Alicia Seckham, it's goodbye.